This trade on BHP that I did a couple of weeks ago kind of went wrong, but I'm still going to make money from it. Here's how. So if you've watched previous videos, I showed you that a couple of weeks ago, I sold some cash secured puts over BHP. On the 27th of February, BHP was trading for about $44.17. Now it had just come down from around $50 or so, and there was this gap at around about $44.50 or so. My assumption was the stock's going to come back up again, particularly because I thought it's going to come back and at least fill this gap at around $44.60 or so. And on February the 27th, I thought this will play out in the next couple of weeks. So I thought I'm going to sell some put options, cash secured put options, with a strike price of around about $44.50, $44.60 or thereabouts. And that's exactly what I did. So on the 27th of February, I placed an order to sell 2 contracts of BHP put options with an exercise price of $44.60, meaning I'm giving somebody the right to be able to sell BHP to me for $44.60, even though today, or on February the 27th when I did the trade, the stocks were trading for $44.17. So I actually sold an in-the-money put option. The expiry date's the 23rd of March, which has now been, and I'll show you how this trade played out. And I put in a price of $1.76, even though the bid was only $1.62. I jumped ahead of the current ask of $2.02, and my order got filled straight away. So I got an email notification on that day saying, yes, we've sold 2 contracts for you of the $44.60 strike price put option expiring on the 21st of March. Now for that, I got my $1.76 for a total of close to $400, $394.24. After costs and after brokerage, I got to pocket $359. That was mine, regardless of what happened with the trade. So that $359 is in my pocket. And I did this trade on the 27th of Feb. Today is exactly 4 weeks later. It's the 27th of March. So here's what happened in that 4 weeks. I got exercised. So what that means is I now own these 200. Well, actually it was 224 because it was a European option, not an American, but that's another story. So I've been assigned 224 shares at $44.60. Today, the 27th of March, they're trading at $43.68. So I'm down by about $1 per share times 224 shares. So I'm down a couple of $100, except I'm not, because I've already collected the $359. Stay with me, this will make sense. So remember, around February, I expected the market to come up and fill this gap. It didn't, it went down, but has since come back up again. But I got exercised 3-4 days ago because on the day of the option expiry, which was the 21st of March, the stocks weren't trading at $44.60. They went as high as $44.40 or $39. So slightly under my strike price. So of course, selling BHP shares to me for $44.60 is better than selling them to the market for $44.40 or 39 cents. Hence, I got exercised. But here's what happened. I have a look in my account and I see that I have been assigned 224 BHP shares at $44.60 for a total cost after brokerage and fees of $10,025.35. So basically, they've taken $10,025.35 out of my account and they've given me 224 BHP shares. Don't forget, I've already got the $359 in my account. So even though it's saying I'm at a loss, I'm actually not, and I'll show you why. So now, today, the 27th of March, BHP is currently trading for about $43.70 or thereabouts. So I'm now saying, well, what if I give somebody the right to buy BHP off me for about $45? They're not going to do it. But if BHP goes up and it's $46 or $47, well, of course they were going to do it. But right now, I'm not worried about whether someone's going to buy the shares off me or I get to keep the shares. All I'm worried about is pocketing a few $100s right now from selling the call options. So I look at the $45 as a strike price, and I look at the option chain, and here's what I do. I say, I'm going to take a $45 call option, not a put, this is a call. This gives someone the right to buy the shares from me, not sell their existing shares to me, on or before the 16th of the 5th, which is May. So on or before the 16th of May, today is the 27th of March. So it's about 5 or 6 weeks away. So between now and the next 5 or 6 weeks, somebody can buy my BHP shares off me for $45 per share. I want to sell 2 contracts, which is essentially 200 shares. Remember, I've got 224 shares because I was assigned 224 shares. Remember? And I want 82 cents per share. And if I get it, that's going to be a total of about $128, $129 after costs. So, if this trade goes through, I get to pocket $129 right now, but I am now obligated to sell my BHP shares for $45 anytime between now and the next 5 or 6 weeks. Now I see that trade went straight to market, so essentially it got accepted because it's under my executed orders. As of today, the 27th of the 3rd, there it is there. The BHP 2 contracts at 82 cents. Now I come into my email and I see the confirmation. They've sold 2 contracts for $45 strike price calls, expiring on the 16th of May for $128 in my pocket. So I've now got another $128 out of this BHP trade, but it gets better. So let's have a look at how this trade's actually panned out. So if you remember, the first thing I didn't own any shares, but I sold 224 put options, cash secured put options, that gave somebody the right to sell 224 BHP shares to me for $44.60 per share. For that, I collected $1.76 per share, which was a total of $359, if you remember that. That was the $359 that I originally collected. But then I was assigned those 224 shares because they didn't finish above $44.60. They finished at about $43.60. So I got assigned the 224 shares at $44.60 per share, so it's cost me a total of $10,025.35 after brokerage and costs. That's my actual upfront cost. So today, I've done the other side of the option wheel strategy, and I've sold some call options. Now I sold 200 of them, or 2 contracts, which means I'm essentially offering someone the opportunity to buy 200 BHP shares off me for $45 per share. And I sold those contracts for 82 cents each, which was a total of $128.76 that I've also now collected. That's the trade I've just done today. And I've just collected another $128.76. So that's today's money in the bank. So in actual fact, I've spent $10,025.35, but I've collected, first of all, the $359 for the put options, and today I've collected the $128 or $129 for the call options, for a total of $487.76. That's how much I've got in the bank so far from these 2 option sales. So in actual fact, if you look at my real cost, sure, I've been assigned 224 BHP shares for $44.60. So that's a real cost of $10,025.35. But I've collected $487.76. So that minus that, my actual cost is only $9,537.59. Not $10,000, because you've got to take that close to $500 out that I've collected into my bank account. So if you take the real cost, the $9,537.59, and divide that by the 224 shares, my actual cost is only $42.50 per share, not $44.60. So let's look at the real numbers. So as you know, I've collected $487.76. Yes, I have spent $10,025.35 now. So if nothing else happens in this trade, if I don't get exercised on the shares, meaning 5 or 6 weeks lapses and I don't get exercised on BHP, meaning they don't trade above my $45 mark, therefore I'm not being exercised on them. If nothing else happens, I make 4.8%. That's how much I've made on this trade already in the last 2 or 3 weeks. So that's my actual rate of return right now. Because essentially if you take 10,000 bucks and collect 487, close to 500, well, 500 out of 10 grand is 5%. It's not quite 500. It's a little over 10 grand. So it's 4.8%. That's real money in my pocket right now from this trade. That's if nothing happens. If I do get exercised on BHP, meaning something does happen, I get to make even more money. So it's kind of a win-win. This is exciting. Have a look at this. So far I've collected $487. I've spent $10,000. We know that. If I am exercised in the next 1 to 6 weeks, I'll be forced to sell 200 shares for $45 each. That's going to give me $9,000. But don't forget, I still own 24 shares because I was assigned 224 shares for this 10 grand. That's what I got for it. 224 shares. So I've only written 2 contracts, which means 200 shares would be assigned at $45 or called away from me at $45. That's $9,000. Now I still have 24 shares left over. Now I'm only going to get exercised if BHP is trading at $45 or above. Nobody's going to come and say, hey, can I buy 200 shares off you for $45 each? If they can buy them at the market for $43. Okay, so if the market's below $45, I'm not being exercised. And that means I get to just make the 4.8% and move on. And I still own the shares and I can sell more calls or whatever I want to do. This is if I am being exercised. So 200 shares at $45, there's $9,000. Bang, in my pocket. I still own 24 shares. Now, these shares have to be worth at least $45, right? Because I'm not being exercised unless they are. So they could be 46, they could be 47. What if the shares go to 50 bucks? If the shares go to 50 bucks, I'm being exercised, but I've still got 24 shares for 50 bucks each. But even at the worst case scenario, they're $45. Those 24 shares at $45 is worth another $1,000, 1,080. So let's do the math on this. I've already collected the $487. I collect the $9,000. And then I also can sell my 24 remaining shares for 1,080 minimum. Could be 2,000, but let's go with 1,080. That's a total of $10,567.76. You add all those 3 numbers, the 9 grand, the 1,000, and the already collected $487. So now, if I'm exercised, I haven't just collected 487. I've now collected close to just over $10,500, $10,567, and I've still only spent $10,025. So here it is. Here I've collected my $10,567. I've spent my $10,025. So you take the $10,567. That's my total collected less my total spent. It's $542.41 profit. That's a profit of 5.4%. So regardless of what happens, I'm either going to get exercised and make 5.5%, or I'm not going to get exercised and make just under 5%. It's kind of a win-win. Bearing in mind, if I'm not exercised, it's because the share price has fallen, and that's totally fine, because I still own the 224 BHP shares, and I can just wait for them to turn back, and they're going to be worth something. I'm going to collect dividends on them. I can keep selling call options over them. Watch the upcoming videos to see what actually comes of this trade, and I'll show you exactly how this trade turns out. But the bottom line is, regardless of what happens, I stand to make about 5% on this trade that I took 2 weeks ago. So it's been a really good trade, and it's been a highly profitable trade. And don't forget, I don't have to sit around and wait to be exercised. Sure, I can sit on the possible 5%, but if BHP goes up, like my first expectation that it would, I can roll these options up or out. Meaning instead of giving someone the right to buy them off me for $45 in May, I can roll them out to June or July and collect more premium. And I'll show you how I do the trade. So this has been a great little trade. It's one of many that I've got on the go at the moment. You've probably seen if you've seen some of my other videos. Hope you enjoyed that. Hope you got something out of it. Please like and subscribe to my channel. Leave any comments below if you found this useful. If you want me to keep making videos like this, show some love by subscribing to my channel. And I know you're getting some value out of it. I'll keep making the videos. I enjoy making them. Trading is something I'm passionate about. I'd love to hear your comments and thoughts. Thanks for watching.